So coming to our third module, which is focused on EV vehicles, there is a lot of confusion in the world that whether the hydrogen fuel vehicles would be more in vogue or the EV vehicles would be more in vogue. And there is this competition going on between whether the Teslas would lead the world or the hydrogen fuel technology, which will again change how our vehicles function, would be at the forefront. Now, over the years, we've seen this huge convergence of technologies, and which gives us more confidence that this is a decade where EV would be more prominent, because the cost curve of the hydrogen cells have not yet collapsed to a level where its adoption can be very high. And if you talk to a lot of experts, for in-city movements of goods and vehicles, it still seems that EV is the way to go. And especially for lighter vehicles like a two-wheeler or a three-wheeler, EV's adoption is on huge scale. That is happened in China, and there's a country whose footsteps we can easily follow, because generally the strides that China has made, eventually the world has also fallen for it, be it solar technologies or other technologies, right? So at scale manufacturing, which has been proven in China for two-wheelers and maybe four-wheelers by Tesla in the whole world, it seems that the coming decade definitely is something where EV should be a lot more focused theme than maybe the hydrogen vehicle theme, right? And in that, if you look at, there have been large investment commitments by a lot of veteran investors. For example, for a three-wheeler manufacturer like an Atul Auto, there has been a huge fund infusion by star investor like Vijay Kedia, which has in a way proved to make a very state-of-art manufacturing facility for EV three-wheeler manufacturing in India. And hence, if you look at the growth of the company, is again exceptionally good over the past 2-3 quarters, and maybe if it is able to continue that, we will know whether there is this scale benefit that company also gets. So the commitments that many of these good investors are keeping a faith in this theme is also evident when we talk to one of the investors who also had attended the investor day of Tesla. And if you've not watched it, the event is live on YouTube also. If you go through the event of close to 3 to 3.5 hours, there'll be huge mindset change that you have towards EV vehicles and the technologies of battery powered vehicles and also battery storage, because the way the designing, the way all elements are being brought together by a company like Tesla, similarly like a company like BYD in China, or maybe in India, you have a lot of these startups which are trying to build that ecosystem. There's a concentrated effort around the world to make this ecosystem work. And seldom we've seen when there has been such a high concentration effort throughout the world, it has failed, right? We don't have still a very concentrated ecosystem on hydrogen vehicles, right? But for EV vehicles, we do have. And that throws a lot of opportunity, right from putting up the charging stations infrastructure to the manufacturing of these EVs, and also maybe to people who can give these logistic services through EV vehicles in India. For example, a friend of mine has ventured into a company which is providing EV vehicle solution to Zomatos and Swiggies of the world, where they are maybe trying to solve the whole carbon footprint of these delivery startups, where they are giving them a value proposition of giving cheaper deliveries but more greener deliveries by giving them a fleet of vehicles which are battery powered, right? So how this works is that they have investors which have maybe bought these vehicles, and the company has taken them on rent and then is again subletting it to a Zomato or a Swiggy for making those deliveries, and the driver management system and everything is then handled by the tech support of Zomato and Swiggy, right? But the business in a way is booming, and his business is growing by almost 100% each year, because be it Amazon, be it Flipkart, be it any large delivery company, they want their ecosystem to be shown to be green. In fact, forget about whether that ecosystem is green or not. The delivery cost falls off the cliff when you operate these inventory more efficiently, because the operating cost of petrol is hardly there, right? So the running cost is almost 80-85%, 90% lower. It is just that the capital cost that you need to put up more in terms of putting up the charging infrastructure, or maybe putting up a vehicle which is EV run, and the battery cost of the EV is higher maybe right now from the engine cost that is there for the ICE vehicles. But if you take it on scale, it will divide the cost amongst number of units or number of deliveries to large extent, and the levelized cost for these deliveries are falling at a very high rate year on year, and that is where the adoption is going up drastically year on year.
अगर आप ये वीडियो देख रहे हो तो इसका मतलब ये है कि आप स्टॉक मार्केट, ट्रेडिंग और इन्वेस्टिंग में इंटरेस्टेड हो। अगर आपको बहुत सारी ट्रेडिंग स्ट्रैटेजीज सच एज अल्गो ट्रेडिंग, फंडामेंटल एनालिसिस, टेक्निकल एनालिसिस के बारे में और जानना है, देन हेड ऑन टू Upsurge.club, जहाँ पे हमने हर कैटेगरीज के बारे में कोर्सेज बनाए हैं।
So in the past also we've discussed that when businesses make rational decisions, that is when the adoption of anything goes through the roof. Today, corporates, consumers, as well as government at their own end are making these rational choices by maybe government ordering a lot of electric buses, the consumers buying more electric two-wheelers, and corporates using two-wheelers for their delivery needs. And that is where the adoption is increasing. If you look at the contracts of buses, be it Maharashtra, Delhi, everywhere, a company like Electra or a JBM Auto or a company like Ashok Leyland, they are getting higher and higher orders for electric buses, and the whole infrastructure is being put together by 3 or 4 bus companies in India, where they are taking this leap forward because of the support of the government, right? But at the same time, you have corporates like a Zomato, Swiggy, or an Amazon or a Flipkart encouraging their supply chains to be EV-fied, so that they are getting a lot of these vehicles at cheaper cost. The delivery cost is going down. At the same time, the ESG impact that they can show to their investors and the community is far bigger, right? So that makes us believe that there will be a huge adoption of the electrification economy in India, and that opens up both for hard assets investment and soft assets investments, and there are a lot of opportunities that spring up because of these events. Now, if you look at a two-wheeler or a four-wheeler or a bus or a truck or whoever is getting converted in an electric vehicle, it needs a battery, right? And if you look at the battery, the energy that is being produced in these batteries is improving every year. But the problem is that our country is not at the forefront of the battery technology. The country that is at the forefront is maybe China. But when we broke up the whole battery management system, so the battery pack is just one part of the battery management system, right? But there's a whole battery management system. Maybe companies like Bosch or other big companies are trying to, excel it, or even companies like Bajaj and other companies are trying to make them in-house. But there are certain components of the battery management system which caught our attention. So if you look at a battery management system also has a current sensing system. So when you look at the current sensing system, there is a small component which is used for the current sensing, which is known as shunt resistors. Now this shunt resistor, we were surprised when we look at that component. A company which is there in India, which is located in Solan, Himachal Pradesh, in fact is the leader of the whole world in manufacturing these shunts. Now, this company is exporting to Korea, China, US, and a lot of countries, and its capacity or market share in the world is close to 15%. Now, that's a very significant thing, because if you look at majority of its products are being consumed by a company called Vishay, which is an end supplier to a Tesla, right? And that is where it has marquee clients, which in fact are leading the whole technology curve of the EV in the world. And hence, if EV adoption in India works or doesn't work, this company's exports are doing exceptionally well, and locally, as and when the technology is getting developed, its domestic usage is also going up. Interestingly, shunt resistors also have an application in the electric meters that are going to be adopted by our country. So if you look at, our country still has those mechanical meters where the reading that is being taken by physical visits, and that is going to be completely done away with in the coming decade, where there have been orders to the tune of 20-25 crore meters that will be done in the coming 4 or 5 years, and that 25 crore meters will have a shunt resistor which will be made by Shivalik, because the only manufacturer of shunt resistors in India. In fact, The shunt resistors which Shivalik makes for the automotive industry, there are just 5 to 6 manufacturers in the world which can make shunt resistor which has that kind of ohm levels, because it requires electric welding facility which is so precise, and the welding should be so stable that they can last for 20-30 years on the chipsets, and because of which getting approvals is a big task. Sometimes 4 to 5 years are lost for getting an approval in a large company for the shunt resistors, and that is where Shivalik over the years has made a lot of progress in terms of getting his product approved, and is now a tier 2 or a tier 3 supplier to a lot of global OEMs which are leading the EV technology in the world. And this company over the years has demonstrated that it has positioned itself into products where it has grown its market share. So way back in 2010, this company in fact was supplying 30% of its sales for a product which was going into cathode ray tubes of the television. And we all know that the technology changed, right? But the company survived still because it focused more on the bimetal and the trimetal strips that it was making, and launched a division of shunt resistors, which shunt resistors, till it was scaling up, it consolidated its world market share in the bimetal and the trimetal strips, which are used in a lot of electronic applications. In fact, for the bimetal and trimetal strips, this company had clients right from US to Europe, where these are large electronic manufacturers of the world, and they had certain plants which they were maybe sourcing from a US, and they were sourcing some components from India. But as and when Shivalik gave them confidence that we can increase our capabilities over here, a lot of plants in the US shut down. And in one AGM, in fact, the promoter, Mr. N.S. Gumman, was explaining us that there was a client in the US which was buying a product from a US based producer, and that component was a specialized component which had almost 4 to 5x of the sales price of the regular component that they were making. But when Mr. N.S. Gumman gave that company confidence that we can make this product for you, because that electric giant was fed up with the US manufacturer because their timelines were late, their production cost was high, and hence they were paying a lot of premium for their product, and there was only one manufacturer of the product in the world. And N.S. Gumman and his team cracked that product for that multinational, and now there is the only sole supplier for the product, in the US facility of the company has been shut off because Shivalik's product has better capabilities, lesser cost, and better timelines for delivery. So that is the capability this company has shown to deliver products to large multinational electronic companies. And whenever any powertrain or any, you can say, battery management system of a large conglomerate is being made, Shivalik does get a feeler of whether they can also participate in the tender, right? Case in point, in one AGM, the promoters described to us that there was a huge event that Volvo had planned in China of launching one of their vehicles, and in that vehicle the shunt resistor was from a Chinese company, and just a couple of weeks before the launch, the Chinese company failed to deliver the shunt resistors on time. Shivalik's management, when it heard this from Volvo's management, from the mail itself, they called up their supply chains to make the product ready, and within 10 days, they airlifted the product to China, and the launch of Volvo's vehicle in China became successful because of such a move, right? And that is where it won Volvo as a client. So that is how this company has been able to add larger clients because of its delivery timelines, because of its service, and because of the product stability that this company has. And if you look at now, shunt resistors have almost become 52 to 53% of the revenue of this company, which were hardly 10-15% few years ago. And the margins of the company have continuously been improving because of the product mix change. And a company which was just doing a meager sales of 120 crores has scaled up to a sale of 400 crores. And now with the capex and 3x expansion in both bimetal strips and shunt resistors, is targeting a revenue of 15 to 1600 crores, where bulk of the revenue, 700 crores, it is targeting from shunt resistors. So this is when a slow transition of the company is happening towards the new energy products, the re-rating of the stock also happened, right? Earlier, we had seen that how you can play cyclicals in terms of, Shangvi movers, which when it transitioned into, supplying more cranes to the wind energy, its overall revenue went up and also the margin went up, right? Here, in Shivalik's case, it's a typical case where if your promoters are having a good R&D mindset, if they are capable of developing newer products, they can look at markets which are growing fast, make a product which is fit to the market and scale it up to be such large portion of their revenue. But initially when the product is scaling up, the financials don't show up, and that is where the market cap of Shivalik Bimetal was hovering between 200 to 500 crores for a long period of time because the earnings from shunt resistor was not showing up in numbers. Because when Visherdale used the product of Shivalik Bimetal for maybe 4-5 quarters, it was just testing its product, right? When the test and everything went well, that is when the large order came. So right now also a lot of these foreign multinational giants are using Shivalik's products, and they will scale it up like Visherdale scale it up maybe in the coming 2 quarters or 4 quarters, and hence the overall revenue comes in lumps. 2 years you will see lesser growth, or 1 year you will just have slower growth, and then there will be a year when this huge order would come, and then there will be a huge upside in revenue. Generally, these companies are ignored by the market because market needs certainty, right? Market needs quarter-on-quarter performance, quarter-on-quarter communication from the management, and which Shivalik management never did. In fact, in the AGMs, they used to share very less things. But someone who knew their technical prowess, someone who was following this closely. In fact, we had a client in Bangalore through whom we reached out to Visherdale, and because his company had a tie-up with Visherdale, we could know the capabilities of Shivalik through what the feedback Visherdale gave us and how they plan to scale up the order with Shivalik because they were very happy with the product. But the market for almost 2.5 years completely ignored the whole happenings or the growth story. It was more focused in buying maybe companies which are launching 2-wheelers which are EV run, right? Or 3-wheelers which are EV run, right? But here you have a company which most of its revenue was slated to come from EV product and a high margin product, and a product where it was not getting hammered just because some product failed or just because some product didn't take off. See, people say that if 2-wheeler or 4-wheeler adoption is going up, why not go and buy Tata Motors because its Nexon EV is doing very well. But people fail to realize how much does Nexon contribute to the end sales of Tata Motors? 2%, 3%? How long it will take for a Tata Motors, which is Jaguar, Land Rover, a Chinese business where it is supplying so much to China, Europe, manufacturing such a large conglomerate, having inefficiencies around the world, to transition to EV? It would take almost 10-15 years. And after that also, maybe only 30%, 35% would be coming from EVs, right? Here you have a company where the waiting period could be just 2-3 years, and a large portion of the revenue is going to come from EV. Much more stable product, margins are stable, doesn't have a lot of disruption, most efficient company in the world. But people don't want to buy a Shivalik, people want to buy a Tata Motors, right? That is where many a times we have displayed that how investing in niche businesses and businesses which have lesser pool of earnings can completely surprise on the upside, because their pool of earnings can completely change in few years. Large conglomerates who have a large pool of earnings, moving the elephant is very, very difficult, right? And people make this mistake again and again of buying these large companies making big announcements. Someone told me the other day that Vedanta is, making these huge investments in semiconductors. So that is a space to be, and hence we should buy Vedanta. But Vedanta is an aluminium, copper or metals company. It has thousands of crores of profit from these companies. And for it to launch a semiconductor business and then that business turning into a huge revenue spinner and that contributing to a large profitability might take 10, 20, 30 years. I don't know. But a small company can have one product that it launches and it can become a significant portion of its earnings, and it again and again surprises people. But that has happened over and over again multiple times, and the sample size is not even small for people to ignore anymore, right? So that is where our focus is, that if you are finding a theme which is growing fast, try to find out, can there be an ancillary play which has a small maybe presence right now, but it has technology capability and a lot of promise in terms of increasing earnings from that sector, because that will have a trajectory of completely surprising the market, and market rewards surprises. So this 200 250 crores kind of a company has now become almost a 2,500 3,000 crores kind of a company, and profits are still growing, and they are maybe from 400 crores guiding a revenue of 15 to 1600 crores. That is almost 3-4x from here in the coming 4-5 years, where all their capacities would be fully utilized, right? And a very stable margin environment, because they have all their raw material costs to be passed on, and they are just manufacturing make to order, not keeping stuff ready and then marketing their product. If the product would be sold, then only they will get the revenue. Nothing like that, right? So that is where business models which are created like this create a lot of value, and hence we are just in a way giving you a description of the whole journey of a company. Don't take it as a buying advice, because Shivalik again has gone up a lot. All case studies that we are discussing, please take it with a pinch of salt, that these are case studies that have happened, and we are displaying that for you to understand how to do research and find your own case studies which can do very well. And please consult your financial advisor before taking any decision, because you can get trapped at higher valuation if you don't make rational decisions. Thank you so much.